Hello, good afternoon all of you. Welcome to Edelweiss Commodity Con Call. I'm Renisha Chenani, heading the Commodities Research Desk, and I'm here to share my views on commodity market for next few days. With April, we mark the beginning of new month, new quarter, and new financial year, and hope new beginning is better than the past. Worst performer in the month of March was natural gas, falling 18% and trading at decade low. The rising inventories were the only reason for the decline in the prices on absence of spot demand. Our view is sideways to down in short term, and prices at NYMEX could touch psychological level of $2 and around rupees 100 at MCX. Crude oil futures fell almost 4%, settled at $103 for the month of March 2012. Oil prices witnessed very range-bound session throughout the month, trading in the range of $108 to $105 after making high of $110 in the starting of the month. The mixed economic data and record supplies kept oil prices under pressure, with the news of oil release from the strategic petroleum reserves from EU and US, which dragged oil prices towards $103 in the end of the month. We expect oil prices to decline in short term with the support of $101 and $98 and resistance at $108. At MCX, prices are expected to trade down with support of 5110 and 4980, with resistance at 5330 and 5460. Gold is trading in range of $100 from $1,730 to $1,630 at COMEX from last few days. At MCX, gold has support at 27,800 and resistance at 28,800. For next week, prices will have support at 28,400 and resistance at 28,600 and 28,800. Silver has been in downtrend from last 1 month, and prices have fallen from 60,000 to 56,000. For next week, 58,000 will be the cap and 56,300 will be the support. View on precious metals is bullish for short term, and dips could be used as the buying opportunity. LME copper is also in the range of 8,200 to 8,800 from last 1 month, and while at MCX the range is 428 to 440. If prices sustain above 440, prices could go up to 450 in this week. Nickel prices came under pressure, with prices plunged to 17,000, down more than 7% in last 1 month. Increasing stocks at LME warehouse coupled with the rising production and weakening demand tempered the sentiment. LME nickel remained the top loser in the metal complex and dropped below 17,000 as LME stocks have increased by more than 10% in first quarter of this year. Nickel prices have fallen 23% in last 2 months, so we may see some short covering in prices, and lower level buying could fetch prices to trade around 990 to 1000 levels in next few days. On agri side, after Goa delisting, future trading in 7 food commodities whose prices have more than doubled in past 3 months is under the government scanner, and action will be taken if there is evidence of speculation. The FMC plans to monitor trading patterns, volatility and individual trading positions in black pepper, mustard oil, chana, potato, soybean, cardamom and mentha oil. Between January to March 2012, mustard seed prices have risen 101%, chana by 108%, potato at 170%, mentha oil at 172%, soybean 118%, cardamom 185% and black pepper 122% on the exchanges. Mustard seed, chana, potato and soybean are important contributors to the monthly food inflation index and impact consumer budgets, so these steps are taken. Our view is bearish in spices like cardamom and pepper, where we have target of 1,000 and 38,000 respectively. On economic plate, we have two important data to be released in this week. Firstly, the minutes from the most recent FOMC meeting on Wednesday, and secondly, Friday brings the US monthly non-farm payroll report and is most important update on the state of US recovery. Given the uptick and revision in jobless claims, there is very good chance of job growth slowed in March. Note that India, US and Europe will be closed on Good Friday, so reaction on this job reports may be delayed until Monday. Last but not the least, we have also released our monthly Commodity Globe report today. So to get medium term view and perspective on all commodities. Please go through the report. We have also tried to explain in detail the ESM facility, that is European Stability Mechanism, where deal of 800 billion euros was done during this weekend. So this is all from my side. Thanks.